All right. Good morning, everybody. Hopefully, everybody had a good night. Here where I live, we're getting big fat snowflakes, and I totally love it. So it's like, yeah, this is a great morning. Got some really nice price action, got some snow coming in. Life don't get much better. Hot cup of coffee. So what happened yesterday, right? That's kind of what I've been hearing a lot. The minutes were supposed to be nothing more than a more detailed explanation of the presser that the homeboy at the Fed gave us, right? So, what happened? Well, apparently, in those notes, in the meetings minutes that came out, uh, the scope and speed of the liftoff is going to be a little closer, a little sooner, and happen a little quicker than um, was kind of implied during the presser, and the market is kind of trying to get that priced in, right? So the way it was presented at FedWatch, markets are pricing in a 68% probability. Notice that that's a one standard deviation number of a 25-point basis rate hike in March. Now, they already expected a hike, right? Um, well, no, let's rephrase that. They were expecting the reduction in bond asset purchases to have concluded near March, but they weren't quite sure on the scope and size of the hike after they were done tapering, right? First, they want to finish tapering, then they want to start the liftoff. So taper was expected to kind of end around March, and then they were expecting, a slight move in hike, right? A slight hike. Now it's looking like a 25-point basis rate hike in March. That's hawkish policy is what took us down yesterday. And what's interesting this morning, while I was checking a lot of publications, I kept reading a lot of things that sound like this, suggesting that stock sell off could continue after the open bell today. I seen this statement 5 or 6 different places this morning. And not, like just random Joe Schmo junk. I'm talking about like Bloomberg, Finamize, Finance Juice. This statement is something I've seen in a lot of places this morning. And you know what happens if everybody says, "Oh, yeah, I know we're going." You know you're going what? You know we're going down. You think we're going up. You think you know where we're going. Watch how many people get caught off sides this morning. Right now, one of the most dangerous things that you can do is think you know, and then hear it repeated everywhere. So if everybody thinks they know that we're going to continue this sell off this morning, if we don't continue this sell off this morning, then everybody is going to be caught off sides yet again, just like they were caught off sides yesterday with those housing numbers. They're supposed to be around 400 and we got 800 and they were caught off sides, right? So it's not every time you see something like that, one place isn't bad. You start seeing it 4, 5, 6, 7 different places, and everybody thinks they know. Guys, I've been around long enough to make the statement, and I'll continue to make it. You don't know. And I'll put every little bit of sarcasm in my voice when I say it. You don't know. No, you don't. You don't know. I don't know either, so don't feel bad. I'm not suggesting that I happen to have some skill set and a crystal ball that you don't have. We don't know. We have a good idea. But what we really want to do is just trade what we have on the screen. You see long entries, take long entries. You see short entries, take short entries. Don't lean on some publication that is telling you, oh, yeah, man, we're going to go down. Everybody knows we're going to continue this sell off. Yeah, whatever. Yeah, we got a lot of things on the books today. Look at all these additional auctions, and it is really important today. I say that a lot, but today, I mean it. Seriously, seriously, it's important today. We've been getting whiplashed in the bonds. We've got a flattening yield curve. Got things going on over here that just makes you blush At the same time that we keep saying it's not supposed to do that. When this does that, these are supposed to do this, and it's not doing that, right? We're getting a lot of head scratching, even from 20-year analysts that are sitting there saying, I wasn't expecting it to do that. It's not supposed to do that. If you've seen that Facebook commercial with a bunch of old ladies standing in a circle, and one of them is saying, that's not the way this works. That's not the way any of this works. That's kind of what the analysts are saying in the last couple of days. That's not the way things are supposed to go. Yeah, well, it may not be the way things are supposed to go, but that's how it's unfolding. So, as these auctions come out today, really be careful of a market flip. So, for an example, if the early econ does not send us out of this range that we're in, then it's very likely the additional auctions will. I would not be surprised if we do the either or, right? Kind of like we mentioned yesterday. We'll give, like I always do, two different theses, an upside break and a downside break. There's always the third possibility that we just don't do anything, right? CPI, jobless claims, merchandise trade, factory orders, natural gas. Yeah, keep an eye on it. The main ones today, 11 and 11:30. Any of the people who've gone through my coaching material know how I feel about the lunch hour, how important it is, and how it can change an entire day right through that lunchtime zone. When we have additional auctions, that gets magnified exponentially. So it's a very busy day on the docket. Do not expect some kind of buy and hold play through the day, right? We may have done that kind of trading before coronavirus, but it's been a long time since I've bought futures early in the morning and held them all day long. It's been a long time since we've done those kind of trades. Get your profit, lock in your gains, and maybe reset and look for another opportunity. A very busy docket. Keep in mind on Thinkorswim, you can always just right click and create an alert, and it'll give you a little heads up uh, right at the time of the event or just 15 minutes before. Short, simple, easy. You can even write yourself a little bit of a note, and it will pop up on your smartwatch or your phone. They'll send you an email. It'll pop up here in the messages, however you want to do it, right? It will warn you and give you a heads up so that you don't forget. I mean, hey, we all get busy, right? You kind of lose track of time, maybe get a little busy. So that's what happened yesterday. And I had someone ask me yesterday afternoon, what did I think was going to happen going forward, from here in the next week? And at the time, I told him I don't know. I haven't had a chance to go read what happened. We knew the minutes had come out, and we knew that it was because of the minutes that we fell, but we didn't know what was in the minutes that made the fall. Right? I didn't know. I had not yet read anything. Now we're starting to get some background on this move lower. Now, a lot of times when we get a move like this, I have to remind people it's not nothing's changed, right? They haven't instituted anything. They haven't done anything. They've not pushed a button. They haven't adjusted anything. This is all market sentiment and pricing in what they think the impact is going to be going forward, right? Because they don't wait until we get to March. They start pricing things in now. So they lost a little bit of their warm, fuzzy feeling, and they're trying to get a grip on a 25-point basis rate hike coming in March. Okay, I mean, I get that. But this is supposing that everything stays on track. If we start getting more corona lockdown or a new variant shows up, uh, right? There's a lot of things that can kind of derail that. Another thing to keep in mind when we see this sell-off is the scope and breadth of the sell-off. There's the rule of sevens, which is a pretty interesting rule. I hadn't really heard it said that way before until recently. Uh, a good pullback in the indexes is 7%. A correction is 14%. It's 7 twice. And a bear market is 21%. That's 7 3 times. 7, 14, 21. Real easy numbers to remember. We don't have a 7% pullback. This is only a 3% pullback. Not even 3, right? It's nothing. To get a better feel for how nothing this move was, that it really didn't do that much. Although it seemed extreme yesterday, it didn't really go that far. It was just how fast it went as far as it did, right? That's really the issue. Not how far it went, how fast it went, how far it did, right? So there's the weekly expected move low. That line was drawn last Friday. So it's not like I had to go out there and put one on. This midline was drawn last Friday, and that line right there was drawn last Friday. We close for the week inside of this range more than 70% of the time. We're at the bottom of the range now. We even dipped it down below it. Look at how price responded to that line. That line that has been there since last Friday. Pretty cool. Mean that stuff works? So for today, excuse me, I hope I got that muted in time. I hope I didn't just cough in everybody's ear. If I did, I apologize. We are range bound at the moment, and we have a very ugly inverted head and shoulders. It is there. You can really see a 30-minute head and shoulders a lot better. I don't know who started this maybe years ago, but it's always done with like a hand-drawn pencil, usually with big, thick lines. There's your head and shoulders. Inverted, of course. Now, there is the idea of the failed flag. That would be our flag. It is not yet failed. A continuing flag would break to the downside, and that would not be a failure, right? That'd be a continuation of the flag. The thing is, the more we stay sideways just doing that, the more likely it is to fail, which ends up then seeing a break to the upside, and then we end up with a cup, right? Nice move to the downside, go base sideways, and then back up again, forms a cup. It's really interesting how price patterns build and lead into the next pattern, which build and lead into the next pattern. Thinkorswim has a new drawing tool called quadrant lines. And the thing that I use this for is when I'm measuring price pattern, because we can measure head and shoulders, flags, cup and handles, even ranges, and then plot the breakout of those and the target destinations. It's why we can trade on any time frame we want, right? We can trade 1 minute, 10-second, 2 hours. It doesn't matter. Whatever time frame you're on, the price pattern on that time frame is something that you can measure. And the price pattern on that time frame will give you a projected move of an expected target. So if you have a 10-second price chart with a head and shoulders and you measure it, it will give you a 10-second price target. Pretty cool. 4740 is the upside projected target from this inverted head and shoulders. There is a reason that I have the 50% line marked, because a lot of patterns fail halfway to their target. I used to know some stats on that number. I no longer do. I think I have it in my notes somewhere, perhaps, of the failure rate. How many of them only get to their 50% before they begin to fail? I don't know it on the top of my head. So, if somebody does, throw it out there. If not, I'll have to dig through my notes. So the 50% mark would be around 47.20 when we measure from our current location and we're basically flat on the day. You're looking at less than a 1% move. Well, we have an ADR of 1.3. Notice it went up. Yesterday it was an ADR of 1.2. So the average daily range is increasing, of course, because we're getting these very large impulse moves. So that is our upside projected target from this inverse head and shoulders. Um, it's not yet valid, right? We need to break the neckline before it's considered a valid head and shoulders. Right now, it's a forming head and shoulders that is not yet fully formed. We don't have the right shoulder. We don't have the neckline break. Generally speaking, I don't like to wait until it breaks the neckline. I'd rather get in on that shoulder. But that is a higher risk entry. You got to kind of take it with a little bit of a grain of salt. To me, yes, it may be a higher chance of losing, but the risk is really low and the payout is much better. And I'm not scared of taking a losing trade, and I'd much rather take a trade with a little more risk that has a much better risk to reward, right? I don't care about video games and winning frequently. I care about making money. And you don't make money because you win all the time. All right, that's the ES to the upside. What if things don't go up? What if this inverse head and shoulders fails and we go the other direction? So a downside move would first need to break that Globex low. Then we'll deal with the 4640 range. It looks like we would go through that area very quickly. There's not a lot here to slow it down. From 4640, it's likely that we could hit something like 4620. I wouldn't expect another 2% move today, mainly because a lot of that was shock and awe. We were already offside on the housing numbers. The scope and pace of the base rate hike kind of shook things loose. They're trying to reset and reorganize their numbers. And you could even look at the MOC from yesterday, right? So, is it possible we go another 2% today? Oh, yeah. We never want to say a market can't do something. It's just very unlikely that we're going to see another 2% move today, unless some of this econ today pours gasoline on that fire, right? So a 1% or even a 1.25% move from our current location would be about what we would expect. And that really prices us in to that range that I was just talking about, right about in there. Now you could, mark the bottom of the range and mark that top of the range, and that would give you two different places, the top of the box and the bottom of the box. It's one of the reasons I just like to use the box. I didn't have to draw two lines if I just use a box. The top of the box and the bottom of the box. Deal. So that pretty much gets us, right? Don't forget to add your cog line on 4711. There's another one at 4611, of course, but I don't see us going that far today. I will be presenting a hedge today for those of you who don't have one. I always have a hedge. Um, but I noticed yesterday it's like less than 2 weeks to expiration, so I need to re up my hedge anyways. It's not usually a good time to do it during volatility like this. You want to try to get the hedge when we're not so volatile. That way you can get them cheaper. right? And we're kind of bid up a little bit. But although it doesn't make much sense to do what I'm about to do, I'll do it anyways. There is a head and shoulders here. Um, Looking at patterns on the VIX is a little bit of a joke. If you understand what the VIX is, it's nothing more than a mathematical formula based on the amount of trading activity in the SPX options. So, generally when we talk about trading activity, we call that volume. This is basically looking at options volume on the SPX. Let's just, put it down into like layman's terms and get rid of the nerd talk. The VIX is nothing more than option volume in the SPX. Do any of you ever look at volume and think, oh, I got to go measure a head and shoulders? No, of course not. It's volume. I see people analyze the VIX all the time, and I just sit there scratching my head wondering, what are you doing? You're measuring what? Volume? You think that some head and shoulders or cup and handle or moving averages on this is going to give you any indication of where volatility is going whatsoever? The only thing that this is reading is the scope and speed of the buying in the SPX options. That's it. So don't waste your time analyzing it. But like I said, there is a head and shoulders there. Take it with a grain of salt. Consistent, persistent move in the bonds. You can see its algorithmic nature. The dollar giving us a little bit of a whiplash in the afternoon yesterday. That is a great example of a failed flag play, by the way. And it did reciprocate, made it back up to the open of yesterday, which is what we use for our target when we do run a failed flag play. That's like first goal, first blush. If you was to measure that entire structure with something like the quant tool that we used earlier, notice where it stopped. Come on. It's almost starting to seem like this stuff works. Hit its target. We're range bound in the dollar. Keep your eye on these two today, especially with the economic news coming out. Maintain your perspective of these four indexes: the Nasdaq, the ES, the Russell, and the Dow. When we are bifurcated, it's a safer market. I know it may not seem that way because it's probably harder to trade for you, but it's a quote safer market. So when you got the Dow moving up and the S&P moving down and the Russell's just kind of wandering around doing its own thing, it's a safer market. You get all four of these doing the same thing at the same time, whether it's all up or all down, you can see some very, very violent, very extreme moves in the market. Notice yesterday afternoon, for an example, they synced up, right? They all went down at the same time. Or the NASDAQ, we don't really have as good of a pattern here. While I'm on the 1 hour, I may as well mark this low because it's going to be important. Should we break to the downside and get past our own Globex low at the current low, then this will be the next one, the roundy 15,500. A break back to the upside, we'll first have to reclaim where we closed, then deal with the Globex high. We should be able to travel through this area relatively quickly because we didn't leave any volume nodes behind. If you was to turn on a volume profile, you would just find it to be a very shallow area. So we're easily able to move back through a zone like that quickly. And then when you add something like mean reversion, then the likelihood of that becomes a lot bigger. Mean reversion, right? Here's a great example of that. We moved very, very far, very, very fast. And then we just whiplashed and went right back down in the other direction. Even if the market wanted to keep its bullish nature, it basically reset itself and then carried that bullish nature. All right. Mean reversion. So here on the downside of that, on the negative side of everything, we moved very far, very fast to the downside. Even if we were going to carry that bearish nature, it would still not be a surprise if we whip back first and then continue that move lower. The analogy is, for those of you old enough to remember the toy, the old wooden paddle with the ball on a rope, right? And you hit the little ball with, and it would bounce away from you and then it would come back. Well, the harder you hit that ball, the farther it went. True. But the faster it came back at you. That's the same thing here. You see a stock or a market or a price move very, very fast in one direction, buckle up, baby, because it's going to come back the other direction. Not every time, right? There's no always in the market. So that covers our down and our up for the Nasdaq. You know, there is always that third possibility that we do nothing and we just stay in this range bound market. Thesis, alternate thesis, and then third choice range in the middle. I do not see that we're going to just remain sitting in the middle, but it is on the books. It can happen, right? So for things to trade today. Oh, Webull got an update. This thing is getting more and more amazing. I still don't use it for options very much, but when I'm trading pennies, that's what I use. The desktop version of Webull. Had someone asking about pennies the other day. If you're new to trading and you're in a small account, pennies should not be your go-to, right? Penny trading is for elite, skilled traders who have mastered their art and their craft. And then they go in and show off and trade pennies. It's an accumulation of skill sets showing years and years of mastery and experience. If you're new and you're in a small account, you are very likely not going to be able to trade live consistently and profitably for a few years if your focus is pennies. A few years before you can even start trading live. I said, screw that. I started with a small account. No way I was going to sit in there, paper practice for years to get to the point where I could trade pennies just because I had a small account and pennies seemed like the only thing that I could trade. Forget that. I used my small account and went and traded things that were leveraged with that small account so that I could grow that small account quickly and start trading sooner and not be sitting on the sidelines for years learning how to trade pennies. Something to think about, guys. So we're looking at the S&P. We want to look at the pre-market change percent. I use a filter to knock it down near 100 names. I'm not perfectly right at 100 names, right? I want to get really close. The reason for that is there is no choice for an S&P 100. We got a Nasdaq 100 and an S&P 500, right? So we just use the 500 and knock it down by market weight to close to 100 names. Then I adjust the color scheme in here. Notice it's reading a -3 to a +3. Well, that gives us a lot of gray. So we're just changing the color, right? We want to use a decimal point 3 to decimal point 3. Now we got rid of a lot of that gray, right? That's the only thing we're doing. We're just changing the color scheme. So there are some bright spots of green in here, but a whole lot of red as well. The FANG names stand out as negative, mostly negative. Facebook and Nvidia are both on the FANG name list, and they're slightly green. Even Google isn't negative, I guess is a good way to say it. Now, this one is the Nasdaq 100. We don't need to filter it, but we do want to change it to pre-market change percent and then, do the color scheme again, give it a little bump. So everybody gets so used to running in tech all the time, right? Tech. Well, when it's not tech, then what are we supposed to do? One thing that I would recommend is to lean on sectors that are doing really good. Think about what JP Morgan had said about companies that can pass on their higher costs to consumers. So here in the Nasdaq, which is basically a technology index, you can see there's a lot of names that aren't just straight up technology, right? I mean, Starbucks, that's leisure and hospitality. Costco, plenty of names in there that aren't tech. One thing that is important about the Nasdaq 100 is it does not have financial names in it. So how many names in the S&P 100 are up at least 1%? 14 names. It's a bigger number than I expected this morning. A lot of it is finance and energy. And last year, those two sectors were very correlated. We don't know if it's going to stay that way into this year. So far, yeah. Yeah, energy and finance has been the play this week. Been pretty much the play this week. So probably going to want to see that continue. I'm going to knock this back from 100 to 50, a half of a percent. 23% of the S&P is up a half of a percent this morning. And you want to kind of go down that list and see what stands out, right? What sector, what industry, what sub-industry. The individual names are fine, right? I mean, GM is doing good this morning, whatever. Yeah, that's great. But you really want to try to see what is standing out as a sector, subsector, industry. Since the Nasdaq does not have financials, when we look in that direction, asking, well, how many names in the Nasdaq are up at least a half of a percent this morning? Just 10 names. So what I need now is TrendSpider to trading views fine for what it does, but it does not do custom watch lists very good, right? I mean, I can see it on the side. I can have a custom watch list on the side, whatever. Yeah, but when it comes to scanning in that list or filtering that list, TradingView just really lacks that. So here's the sectors this morning. Energy is leading the way, and finance is right behind it, right? And then industrials, even small caps, IWM, it's getting shook around. Guess I should have waited for it to finish off. Emerging markets is slightly green this morning too. I'd be watching this for a red to green play. I'd be watching a lot of names for a red to green day, right? That red to green setup that we've talked about before, where we want to see a market close in the lower portion of that red candle. And then in the pre-market, we want to see a pre-market rally back up at least to yesterday's open. So that in today's open, we see the market open higher than yesterday's open. Yesterday's open becomes our support so that when we do see the market open today, we don't want to witness a fall lower than that open of yesterday. So the sectors aren't looking really that negative other than tech, right? XLK and QQQ are both down a quarter of a percent. I opened a new long trade in XLK two days ago. Good time to go long when things are going down. It's generally what I do. Sell out of those as we rally to the upside and then look to reset and do it again, do it again, and then do it again, and do it again. Airlines this morning are not overly too stretched. I like that. Usually in the pre-market, they're either down a lot or up a lot, and they're not either one, right? It's only slightly up this morning, which is looking really good. May get an opportunity for a red to green in the airlines. And the nice thing is, they're not overly expensive things. Not so clean and clear in the chip names. Probably wouldn't want to lean that direction yet this morning. Crypto. Now, this was a interesting part of the conversation yesterday afternoon and this morning when I was going through my publications. Um, Crypto is supposed to be the new hedge, right? It's supposed to be like the modern version of what gold used to be, a safe haven asset in uncertain times. Yeah. Yeah, no, not yet. They decided that it is not yet a replacement for the old school gold hedge, right? The idea was that with so many institutions trading it in, piling into it, owning it now, from the move of the last year, that it really was going to be that thing, the replacement of gold. And no, yeah, and that didn't work. I did post in the Bullish Bears crypto channel the last update that I had got for Bitcoin. Bearish pressure surrounding Bitcoin strengthened after the FOMC publication, and that it was last trading at its weakest level in a month at 43. So it is not yet the safe haven asset class that they wanted it to be. The EV market, I did see that another company now is going to get into the EV market. Sony. Sony wants to make electric vehicles now. Whatever, right? Okay, I mean, if you're going to get an Apple car, you may as well get a Sony car. I I guess. So a couple legacy names are doing good. The options activity in Ford has been just crazy. If you know how to use the Thinkorswim to go back and look at it from the last 4 days, just do that and see the scope and depth and breadth of the size of these trades that are coming in there. 30,000 contract tape in the blink, right? Just poof. There you go. So some pretty phenomenal options activity in there. And here in the pre-market, it looks like we're still getting a lot of positive eyeballs in there. It faded off a little bit. We had that rounded reversal yesterday, but it's holding the chain. Pot stocks this morning are not doing too bad. A couple of names that kind of stand out, up more than 2%, right? The benchmark is that we need to see names at least a 0.5%, and we've got plenty of those. So, when we're looking at the sectors this morning and you're thinking, well, I've already got energy, I got trades on in energy, I've got trades on in finance. I don't want to put more eggs into that basket. What am I going to trade now? Okay, well, I mean, you got some pot stocks. And as usual, when the sectors do not offer us the opportunities that we look for, we want to use our own scanners. These are days where we have to be stock pickers, where we can't lean on the sectors and follow those into their weight, right? These two watch lists, if you haven't heard me talk about them before, it is a scanner that is looking at companies with weekly options. That's the only criteria. Does it have weekly options? Yep. Okay, it goes in the list. The list was over 600 names, and TrendSpider won't let me make a watch list with 600 names. So I needed to break the list in half. And you can see that there are a lot of markets this morning that are doing really good, and they just don't have any influence from this sell off, right? And that's exactly what you want to find if you're, in one of those accounts like Robinhood or Webull, and you can only buy, which I don't know why you would handicap yourself that way. But, if you're an options trader that can only buy, you're pretty much stuck doing one kind of trade all the time, sucker. And, guess who's selling you stuff? Yeah, we are. Right now, things are very, very, very expensive, and the only thing that you can do is buy it or sit out. Like maybe get a legacy broker, right? So that you're not stuck just doing one thing all the time, like buying. That is your morning briefing, everybody. Be careful, be safe. Have a good morning, and I will see you all tomorrow.